Hello, traders out there. Welcome to Shoulder Tap on a day where there will surely be many shoulder taps, maybe some kudos along the way. I'm Jack. I'm joined by risk manager Mick. What up?
Many shoulder taps today. Many shoulder taps, and then little taps. Looks like you and I are both geared up, ready to go to the golf course after this, Jack, judging by our apparel.
This is just my Friday shirt, as it would be right now, but you always got to have that available if it goes that way. So we'll see.
Well, hey, quite an interesting day. I mean, between yesterday and today, huge ranges. I know there's been some chatter about the price limits and stuff like that these markets have, and I figured we could take a little bit of time to talk about those, if that's all right, because uh, me sitting over here on the risk team, seeing that the Russell was down 4.5% at one point, and we had the Nikkei down about 6.5%. We're getting pretty close to price limit moves and stuff like that. At least the first circuit breaker. I know JD had mentioned circuit breakers, price limits. I have a little bit I want to elaborate on his description about the price limit moves. So I thought we could talk about that if that's good with you, Jack.
Yeah, especially with the way Topstep handles that stuff. So yeah, Mick, you're the man to answer. Let's talk
We
price
should do
limits.
so. We should do so. So all markets that are traded have price limits or circuit breakers, as they also call them. Circuit breakers is kind of a newer term in the last decade or so. Circuit breaker is basically the same thing as a price limit, but we have fixed price limits, and then we also have dynamic price limits. And depending on the product that you're trading, you may have a fixed or a dynamic circuit breaker or price limit. Let's start with equities, though. Most of our traders are doing equities here, NASDAQ, S&Ps, that kind of thing. And, any product that you're trading, CME Group's website has great little links to the contract specifications for each one of these products. If you're taking risk in a certain product, you should know the ins and outs and restrictions or price limits or circuit breakers on these markets. So equities, for example, um, there's 7% limits, 13% limits, and then 20% limits. And those limits, basically the 7% limit is the first one. And, so far, the only one that really comes into fruition. We saw a 13% move not long ago. But these price limits are also subject to change too. Pre-COVID, price limits on equities were 5% up or down. And then with the number of limit moves we had, they expanded those ranges on the price limit. So as it stands currently, the first circuit breaker or price limit on equities is 7%, specifically the CME equities, and Chicago Board of Trade equities too, or equity, the YM, the mini Dow. In the overnight session, there is an upside price limit of 7% up and down. I said upside price limit. There's price limits to the upside and the downside. During the stock session, when the U.S. stock markets are open, there's only a downside price limit. There is no upside price limit on those. So the way it works is, what happens is, if we go down 7%, let's say today we went down 7%, trading technically does not halt if that market, if NASDAQ, which was the closest one to the 7% move today, trading doesn't exactly halt. Now, it halts at a specific price, meaning trading can still occur, but if we were to go limit down for a period of time, that market can't trade past that price level, which is 7% down. Now, trading can still occur. You might hear the phrase locked limit down, and it's literally the buyers or the sellers. Today, it would be the sellers in that scenario that have the market locked limit down, meaning that there is such a great supply of offers at that price. Bids can still hit the offers, so the market can trade at that price, but unless the buyers get much more aggressive, that market is locked limit down by the sellers. And it will stay locked limit down at 7% off previous day's settlement price for a period of time. And if it remains locked limit down, then the price limit will expand to the downside. Next downside price limit is 13%, at which point in time it could get locked limit down again. I think the 20% price limit, which, let's hope that never really comes to fruition, that really only applies to, I think, the last half hour of trading or the last hour of trading. It's like after 2 o'clock or 2:30. I don't feel too bad not knowing specifically right now because we haven't come even halfway
We
there in a
yeah, we got bigger
long, long,
problems
long
if
time.
that's happening. Yeah.
Certainly do.
Something
Certainly
to
do.
note
So,
before you get to the top step thing, in practice, when you see this, is we got a chance to see it a bunch during the beginning of COVID. And what happens is that there are a ton of sellers there stuck there, right? And no one's buying. So the reason that you don't want to be, long into one of those is because it almost without exception is going to plummet as soon as they remove that breaker, right? There's all this, you can just see, thousands of offers and say like the ES or something just stacked up waiting to sell right there. And then they release it and it goes way down and there's no way for you to get out. So you can incur just massive losses on a little bit of size.
yeah, definitely. And that's, one of my biggest concerns. I had a lot of sleepless nights around COVID when we were having those, limit moves, worrying about people getting stuck in positions they can't get out of. If the market goes limit down and you're short and you're in the money, I mean, that's a great scenario because, you've really got a lot of odds in your favor there, but you certainly don't want to be stuck long when the market's locked limit down. Auto liquidators, all they're going to do is trigger a market that's going to probably be the last one, to get filled. And I've seen markets, especially the grains, like JD mentioned earlier. These markets can go from locked limit down, and then basically there's a few trades in between that 7% limit price and then the next limit price, and then they're locked limit down again in less than a minute potentially. So you know there's a lot of people that are chasing to get out of longs. If people are stuck in longs, they're all trying to dog pile out, and everybody's racing each other. And chances are, that's how people blow out accounts, and that's how firms blow out too, getting stuck in those limit moves. So,
And I, maybe we won't get through all the cards today because there's some questions in here about it that I think are worth answering. Eduardo's asking, so you can't hit the bid, only sit on the offer, so only a buyer can transact, not a seller. Yeah, I mean, like basically, so yeah, you can offer it there, and if people are buying, then you might get. That's part of the reason it stacks up so hard is because no one's really buying unless
well,
something
yes.
materially changes in whatever caused it to go limit down in the first place. Yeah, there's not going to be many buyers there.
I mean, sellers can transact if you're in the beginning of the queue.
Right.
So like, let's take the S&P for example, which might be like 200 to 300 up on the bid and offer. You go locked limit down, you might see 100,000 contracts on the offer there. So if you're, trying to sell at that price, which I would certainly, I'll just skip that part. But yeah, if there's 100,000 on the offer and you try and work a one lot or a 15 lot or something like that, you're in the back of the queue. So chances are you are not going to get filled unless the buyers at that price for some reason tend to get aggressive and they take it. They lift it off the limits, which means they chew up all the bids or excuse me, chew up all the offers. And there would certainly be a lot of people canceling offers too. You talk about automated trading and stuff like that, and algorithms and whatnot. There's softwares out there where if there's 1,000 on the offer or something like that, I want to add 10%, and if there's 10,000 on the offer, I'm going to add another 10%. So if people start, that's how things add to, whether it's manual or automation. But if that offer starts trading out and the number on the offer, the volume offered at that price gets lower, you know, offers will
Yes.
start to get canceled. Offers will start to get canceled. People that are watching the market will start seeing, there's buyers pecking at that price. I like to say pecking like a bird. They're pecking at it, they're chewing it up. And then you might see, as it looks like it's trading out, a lot of volumes trading there and the offers are getting, shaved down. Then you might see even more aggressive buyers with the expectations that, hey, this offer, which was locked limit down, is starting to get chewed up. It might get lifted. So I'm going to, get a little bit more aggressive. But you definitely don't want to be an aggressive buyer. You don't want to be a buyer if you're close to lock limit down. We actually here, for the sake of safety of our own traders, we have a little thing, parameter here where we don't want anybody trading within 2% of a price limit move. So if price limit to the downside in S&Ps or NASDAQ is 7%. We don't want people trading if that market is, up or down 5%. The reason for that is it's a very slippery slope. If you hit down 5%, you can go to -7% very quickly. And we
Mhm.
don't want traders getting stuck in positions that they can't get out of. So it's something that the risk team looks at. We had a meeting about it this morning. I talked to my guys about, keeping an eye out for, if we're down X% on the day, net change, what we need to be doing. And we've been looking at that. Fortunately, we haven't gotten there. But we're going to be flattening trades. You certainly don't want to be initiating new shorts within 2% of a price limit move or even closer to the price limit move. You're really sticking your neck out there. Yeah, the odds are on your side that the momentum is down and the market's heavy, but you can also, you've seen, Jack, we've seen large spikes off those areas and those levels. So it's not an area to be taking a new short. It's definitely not an area to be going long. That would just be simply, unwise. So we'll flatten trades around that area unless someone's really got the tiger by the tail and they've got open trade equity, that's pretty significant. Because if you're approaching a price limit move and you've already been short in the money, let's say 60 points in the S&Ps, that's a pretty good one to hold on to. And odds are that it could just get a little bit better for you.
Good explanation, Mick. A couple other questions that we saw. Is this based on the closing price or the settlement, the 5%? I just know that if you go to the CME site, it will give you what the price is based on, but I don't know off the top of my head. Is that off of settlement or is it off of?
It's all based off previous day's settlement. Closing price is not the same as settlement. It's based off settlement price. So it's net change on the day. If you see, NASDAQ's down 20 points or S&Ps are down 10 points, that's always based off the settlement price. So any quote board that shows net change on the day is a price quotation or, points or cents or dollars up and down based off previous day's settlement. Net change on the day is a percent, always based off previous day's settlement. It's always off settlement.
All right. Well, let us know if you have any other questions on the price limits. It's been a long time since we've gotten one of those. And really, we kind of got a little bit caught off guard when it started happening so much during COVID. But they've expanded a little bit. When was the last time? I can't think. Was it COVID? When's the last time we had a limit down in like the NQ or ES?
That's a good question. I mean, there were several of them. We had like back to back to back to back, lots of loss limit, daily limit downside moves in the equities. I think we had one recently, not recently, but one since COVID. But I mean, think about it. 7% is a pretty big move for our U.S. equities. And like I said, the Nikkei was down 6.5% today. That one's actually got an 8% limit on it.
Like right
I
now
mean,
is a good example. We're 2.5% down in the NQU, right? We're down 475 points. That's only halfway to where we would say start flattening trades, right? So that would be
yeah,
a over 900 point move, right? So these things are
yes, sir.
meant not to happen often and just to kind of protect kind of against what happened in 1987. Although we've come a long way with how trades are settled and tallied and things like that. I don't think I'm knocking on my wood desk right now that something like that would happen again, but good to
Anything
know
can
it.
happen.
Yeah.
Anything can happen.
All right.
So those are one last thing. So most of the products have fixed price limits. There's also the dynamic price limits too, which energies, metals, those are all dynamic price limits. These are really different, where you don't run into the same scenarios because they've changed. These used to be fixed price limits. When I started trading for myself back in was it '08 or something like that. That's when crude oil ran from up to $145 a barrel or something like that, and the price limit on crude oil was $10.
Mm-hmm.
Saw a ton of price limit moves to the upside and downside, and then I remember seeing the spreads even moving $25 in a single day. So those had fixed price limits. Now it's dynamic price limits, and you have less concern there about getting stuck in a position that you can't get out of, because with a dynamic price limit, it might be 10%, but it's 10% based off an hourly rolling basis. So, if it's 10% like in the crude oil, and you go down 9% in the first 59 minutes of trade, um, after that first hour, you're down 9%, then the price limit expands another 10%. So technically, in the next, for the next 70 minutes or 61 minutes, you've got a 19% limit. So those really don't come into play as often. And they're a little less spooky. But yeah, anyways, my long spiel. I know we ate up a lot of time talking about price limits, but again, where I started, it's super important to understand these price limits so you don't get caught off guard. Can't say I've ever been stuck on the wrong side of price limit move. I've definitely, been on the right side, whether I, had something riding or actually got something off at the offer when we were locked limit down, or got something off at the bid when we were locked limit up for, future play in the coming days. But you definitely don't want to be on the wrong side of those, because, that $3,000 daily loss limit could be, far, far, far greater. Um,
Well put. Okay, with that, why don't we do like a card or two and see what
yeah,
we
let's
got?
do it. So, good week for the live traders is how it's kind of panned out over the first 4 days. I've got some shout outs. We're not doing exactly the roast my trades today, but the three people that I have featured, maybe we can get through them really quickly, Jack. They are a bit of roasts because these are all live traders that are on losing streaks. So I think we could get through them quickly. But got a big shout out to Liam C from our live account. He's up 30 grand today. He was up 33,000 yesterday. So back to back winning days. For $63,000. He's been a busy boy today, 195 round turns on the day. Shout out to Rips. He's up 4K on the day. Rafa, who is our number one on the leaderboard, was up 29 grand at one point today, only up 14 grand right now. So he kept about half of his equity highs. He's been flat for a little while now, so I'm happy he locked in at least half of that significant day. Giannis up 4,900. Dakota was up 3 grand scalping. He's usually not a scalper, but he was in and out, in and out, in and out today. So happy he's up 3 grand, able to kind of bring his account balance up a little bit. All right, so let's use what time we have left to talk about these trading cards. Again, not roasting anybody, but I did the cards a little differently today. Let's get Itor's card up if we could, Jack. Short, less informative. I want to talk about these losing streaks. So
Yeah.
Itor, unfortunately, his trading is not as beautiful as where he is resting himself there in Spain. Very pretty picture. He's been a live account for 22 days. 14% winning days. Only 3 winning days of those 22 days. Today is day 23. And he hit his loss limit again. So only 3 winning days out of 23 days. Daily loss limit of $1,000 has been hit every single day other than those 3 days. And he's trading like
Yeah.
every single day. Not backing off at all, not stopping, not pumping the brakes, and not even deleveraging. Still trading some little bit more than he should be. If you're having a losing streak, I don't care if it's really 3 days or 5 days or 23 days, you have no business trading additional leverage. Scale down, trade small, because not only is it not working out on a daily basis for him, but 24% winning trades is not that good. So he's now at a 23-day, $20,000 losing streak.
Oh boy. Uh, this card is an effing disaster. Um, we didn't write any roast, but like, I don't think I've seen something like this before. Okay, so first off, and this is true, Itor has hit his daily loss limit on 18 straight days. 18 straight days. And what kills me on this one even more is just that he hasn't taken any payouts yet. And the reason he can't
Not
at the
even
moment,
eligible.
he's not even
3 days.
eligible,
He's
but
got it. Go ahead.
except
Sorry.
he could be. I'm looking at this 18-day losing streak, and we can see where they were flat or high. One of them he was up 2,500. One of them he's up 690, 550, at 4,800. He could be eligible, right?
Could
Like
be.
if he had just stopped there, he'd be eligible and have like, I don't know, like 20 grand more in the account.
Yeah. I mean, the account balance doesn't look well. I mean, I would suggest at this point in time that, with the way things are going, and again, this is a trader we called up from XFA to live. We liked what they had. And, things change, market states change. You could be, you know, in a trader's career, you might have a strategy that, is your bread and butter. It works for, I don't know, maybe it works for a couple months, maybe it works for a couple years. And you milk it while you got it. But market states change, and a strategy that might work for a period of time in one market state may not work in another market state, and that's when you gotta pump the brakes and slow down a little bit and step back and make adjustments to that strategy, or look for other strategies, or look towards other profit centers for yourself. I'd rather see Itor string together a couple $100 winning days, hit that, 5 winning days, and just, take a payout. I'd actually allow someone like this to, take the full 100%, because I'd much
Yeah,
rather see that money go to their pockets than just get pissed away to the markets right now. Excuse my
I,
language, but it's
I'd
like,
say
this is
do it.
hard. It's hard to watch. Yeah. I might
Yeah,
even
and
make an exception, just to get this account in their pocket, and even if they're not eligible. And it, guys, everybody that's listening, guys and gals, it's not something I do, but like, this is super painful, to the point where I'd rather just make an exception, give them all the money, and not see it
this
just get donated.
this corresponds to we were talking about where things start selling off. Is this streak kind of started around July 11th, and I wonder with like the transfer to the live account if he wasn't racking up because he's buying every dip and buy and go away, and then not so much. I, but it has to be more than that. I think even if you were like a perma bull, I don't know how you hit your loss limit on 18 straight days. Well, I would take Mick up on his offer, Aitor. He's still got a decent amount of money in the account. Not much more to
Yeah,
say.
I'm happy. It's a good thing they're in a 50K account size, and it's a $1,000 speed bump on that daily loss limit versus a 3,000. So, well, Jack, if that was juicy for you, I got a little bit more juice with David W here. Let's pull up his card. Another poor metrics here. Again, someone we did like when they were in the XFA and called them up to live, but we've got 13 days of activity here. 13-day losing streak, excuse me, for $16,000, and they're down again today. $1,000 daily loss limit.
Mhm.
Now, David's only got 2 winning days in their live account. Those were nice winning days, though. It was a $9,800 winning day and a $13,000 winning day. So this is someone who also in a 50K. So it's nice they've got that $1,000 daily loss limit. They're looking to take big bites out of the market, and they're only getting them 10% of the time. So it's like, what do we do with this 13-day losing streak for 16 grand? Call it a 14-day losing streak now with today's activity for 17 grand. I kind of have the same opinions, for David as I did Itor. This is not what we want to see, and I'll tell traders out there, it's not your job to participate in the markets every single day. It's your job to find good trades. So we don't get paid for showing up and losing money. We don't want to be hurting our accounts. But you know, I think there's a lot of people out there that feel like just because the markets are open, I should be taking trades if I see something. But if you're on a losing streak like this, like either of these cards that I featured, you're not seeing things well, and whatever setups you're taking, they're not panning out. So take some time off. pump the brakes. You wouldn't, if this was a checking account, you wouldn't be, so willing to hemorrhage cash out of it. You'd say, oh, I might have a little bit of a bad spending habit or something like that. I need to get that checked out, or I need to clip my plastic card or something like that.
Yeah, I'm trying to zoom in on this one day. I mean, these are the sort of things that kind of cripple an account. Is on this losing streak on the 31st. He was flat and up 15K, and then hit the daily loss limit and then some. Let me check on my chart real quick. Okay, so that to me seems like more Fed trading nonsense, right? That was Wednesday. Somehow got up 15K, has a 1K loss limit, and then lost like $16,400. With an account that size, you've already won if you make 14K in a day, right? Certainly you don't want to give away more than half of that. So I don't know what to say. Once again, yeah, no picking on anyone. I'll just say for everyone in general, just because you make money on a day, it doesn't mean that your new what you can lose is that, right?
Yeah.
It's like betting double zeros on the roulette table, winning, and then being like, all right, double zeros again, right? You're probably not
There
going to be right.
definitely is a mathematical odds to that.
Yes. Yes, yes,
Poor
yes.
odds. Poor odds at that. Jack, we've got one more card. I want to talk about it really quickly. Let's be quick. Can we just get Jaziel's? I
Yeah,
know we've got like 1
we'll
minute.
race through it.
Another losing streak here. 7-day losing streak for 18 grand. Surprise, surprise. Today, we've got our hat trick, the Three Musketeers. They all did daily loss limit today. $3,000 daily loss limit was hit today for Jaziel. Similar poor metrics, right up there in the losses on this streak. But the thing that gets me about Jaziel's trading today, guess what position he had on? Guess what position sizing he had on when he got auto liquidated today?
Oh, he's in a 150K account. I don't know, 15 NQ.
Close. I mean, he had a 10 lot on. 10 lot. You're on a 7-day losing streak, and you're trading 10 lots. You got no business trading that kind of leverage if you're on a losing streak like that. Again, scale down. I always make the poker relation. If you got a good hand, you put more chips in the pot. You leverage, you press. Don't be pressing when you're not trading well.
Yes.
Deleverage, fold, call, whatever, but don't be trading 10 lots. So, this is another person who's in an extremely sticky situation based off of poor money management. And I know we're up on time, so I'm going to leave it at that. But I
Yeah.
wanted to share this with everybody.
Dakota was trading 1 NQ today. 10 NQ today's. I don't know what to tell you, man. Well, sorry to end Friday on kind of a downer with those cards, but I guess we got to show the both sides of the thing.
It organically happened. We didn't prep any roasting, but I just went right to the losing streaks in the live accounts, and this is what I got. So this was a bit of a roast and a learning lesson for everybody else out there who's not on a losing streak of what not to be doing.
All right. Well, thank you, Mick. We're running a little bit late, but we'll take a quick break and be right back with group coaching with JD and Hogue. Stick around.